If I can't contribute to a Roth IRA because my husband and I file taxes separately, or the corollary, I make too much money or we make too much money, can I still contribute to my 403B Roth with a company match? Absolutely. So this is for Kathy out in the great state of Pennsylvania, Commonwealth, excuse me. I'm not sure about the married filing separately, what the point of that is. Look, I don't know. My concern about marrying filing separately is that, look, I'm not a tax guy. I haven't heard that many instances where it makes sense to do it, but I'll leave that to you, Kathy. But sure, I mean, if you got a 403B at work, you can absolutely contribute to the Roth 403B if they offer it to you. Absolutely, you can do the max. She didn't say how old she is. 5 years from retirement, so I presume she'll be able to, for the catch-up. I think that's $25,000 this year. So, Kathy, you could defer 25. We'll just say $25,000 into your Roth 403B, regardless of married filing separately, regardless of making too much money. Doesn't matter. It just anyone can. Jeff Bezos can. You can defer that to your Roth 403B. Now, recognizing that will not reduce your bottom line taxes. Your taxable income, thus, will not be reduced by that $25,000, but it will be able to be used in a Roth tax-free for as long as the eye can see. Now, remember, for a Roth 403B or Roth 401k, you still have to take mandatory distributions when you're 70 and a half. So when you do decide to leave the workforce, go ahead and roll that Roth 403B into your Roth IRA to avoid the required minimum distributions in the future. Wow, lots to chomp on there, but absolutely, I would highly, I mean, I don't know what your financial situation is. If I have access to a Roth 403B, I'm taking advantage of that. Now, the follow-up question is, will the company match? The company match is always going to go in the deferred side, all right? So if you have your Roth 403B is what you're putting in. That means you do not get a tax deduction on the front end. That just means you'll never pay taxes again under the current tax law. What the company matches, though, that goes to the deferred account, which means you will pay tax on that money at some point whenever you pull the money out, and it'll be taxed as ordinary income. So just keep that in the back of your mind. So essentially what I was doing when I worked for a corporation, all my money went to my USAA 401k Roth 401k. We'll say I put $10,000 in there or whatever. And then USA would just say match $10,000. $10,000 that they matched went into the traditional 401k. So I didn't get taxed as this as income yet because I hadn't received it yet. It was deferred income. It was deferred until I take it out, which I'm taking out now. But my Roth 401k, I did get taxed as income because I wasn't deferring. I was actually recognizing it today, but I would never pay tax on it again under most circumstances. I hope this makes sense. So go ahead and take advantage of your Roth 403B. Absolutely.